Hey guys, Stokes here, and welcome back to another Weekend Trading Edge video. If you guys are brand new to the channel, welcome. This is a video that I do each and every weekend, sharing a few of the top trading ideas that are on my radar for the week ahead. I used to talk a little bit about the fundamentals as well, but I decided to make that into a completely separate video, which usually comes out Sunday night or Monday morning, US time or New York time. So we do have a busy week of news events coming out, so make sure you keep an eye out for that video as well. Also, we need to name it. It looks like it's going to be a regular thing, and I'm bad at names, so if you have any ideas of what we should call that video, type it in the comment section below, and at some point we'll vote on it. All right, let's hop into the charts. So we're going to start here on the euro dollar daily chart, and this is pretty much going to be a follow-up on an idea that we looked at last week because not much has changed. We've just gotten closer to the completion point. So what we were looking for here was a potential advanced pattern formation in the form of a bat pattern. We had price action give us a swing low to swing high, giving us our X to A leg, a retracement into our 50% Fibonacci level, which would be our B leg and qualify us for a potential bat pattern, a failed extension up, and then we were looking for a push down with the completion point being our 886. We had some other technical stuff there as well, the breakout and the medium point of the wedge pattern, the 155 even handle, and last week you looked for a continuation opportunity to the short side, which it's making its way down there. But as of right now, the bat pattern is still valid. So if price action were to come down to this 886 and complete within this zone, this would be a bullish opportunity. So nothing really new here, but it's still on the radar. You guys like the euro, so wanted to keep you up to date. Speaking of wedge patterns, next we're going to head over to the Aussie dollar daily chart where we have a wedge pattern forming as well. Price action has recently given us a little bit of relief. You can see that we had a loss of momentum pattern to the upside, and then we fell back down to the downside, holding at our previous level of structure support right there. If we go down to a lower time frame, the 4 hour, you're going to see, right, on the daily, you can see kind of price action just going up and down and up and down and up and down with the range getting smaller. We're going to get a clearer picture of that painted as we go to the 4 hour, and it's going to be in the form of a wedge pattern. So with this wedge pattern, what I'm looking for this, I'm looking to identify a high point of the wedge. I'm looking to identify the low point of the range, and pretty much I'm connecting the dots. I can see that on the upper end here, our highs are getting lower, right? So our highest high right there, and then progressively they're getting lower and lower. And then just the exact opposite on the low side. You can see my initial low is right here with the circle, and then my lows are getting higher and higher. And this is going to be that consolidation pattern. Pretty much the range of price movement is getting smaller and smaller. Imagine it being like you squeezing a spring. At some point, that potential energy needs to burst out somewhere, and that's when we see our breakout. Now, the thing to remember with wedge patterns, right? There are certain patterns out there, certain breakout patterns where you can form a directional bias. You have your flags, you have your ascending and descending triangle, stuff like that. A wedge pattern or a neutral triangle pattern like this is pretty neutral, meaning that the pattern in itself doesn't necessarily tell us that a breakout is more likely to happen to the upside or the downside. So we have to use other price action clues, and that comes from your overall analysis, which in my opinion, I think you should be doing anyway. Now, in this particular pattern, the interesting thing is that, again, we have held a previous level of structure support. We have not violated this level. Therefore, based on my rules, lower low, lower close, we cannot, or I cannot make a prediction that price is likely to go lower versus higher. There's also nothing on here that says I should expect price action to go higher versus lower. So the question is, what do you do? And the answer is you wait for confirmation, right? There are going to be certain circumstances where you can get involved in a trade in advance of the breakout, meaning you're anticipating a breakout in a certain direction based off certain clues that the market will give you. But a more conservative approach is just to wait for the market to show you. Something I tell the traders that I work with all the time is that we want to be predictive in our analysis and reactive in our execution, meaning that our job as traders is predicting. All right, I think price is going to this, I think price is going to do that. But just because we predict doesn't mean we throw money on the table and have a bet on it. we wait for price action to give us a clue. We wait for price action to confirm that our prediction is more likely to be right versus wrong. And that's what I would wait for here. Now, there are a few ways to do this based on your overall philosophy of the market and your level of aggression as well. And either way includes breaking of a key level. Now, I am a horizontal support and resistance trader, meaning that I don't really care about quote unquote trend lines, right? I look for extremes of the range, so a high right here and a low right there. So what I would need to create a directional bias is I would need either a break and close above this high, and that would give me a bullish directional bias, or a break and close below that low, and that would give me a bearish directional bias. I'll bring the little emojis on here. That would give me bearish. The other one would give me bullish. However, as you can see, in a case like the wedge pattern, those levels are really, really far away from price action. So it's going to be a really, really, really late entry. Now, it'll make sense once we talk about where targets could go. Another way would be to wait for the violation of your trend line. If you are a trend line trader, meaning you look for slanted lines of support and resistance like this, well, now your violation points are going to be a little bit closer. Your violation to the downside is going to be a break of this trend line. Your violation to the upside will be a break of that trend line. So you can get in a little bit quicker. Now, really important, because we had this conversation in the live room on Thursday. You don't want to do something just because it's quicker. You don't want to do something just because it gives you an excuse to enter the trade. You want to do something that is actually in your trading plan, in your rules, that actually meets your philosophy. So even if I wanted to enter this trade, if this happened to be the best trading opportunity in the world and I wanted to get involved and I couldn't because the horizontal lines are a little bit higher, I couldn't just automatically say, well, I'm just going to do this instead. That's called forcing the trade. That's a big no-no. That is one of the major reasons that a lot of traders go broke. So make sure you're consistent with it. Now, let's talk about where price can go if we break out either way, right? So we're preparing for both sides of the market. I'm going to bring some volume in. The first level that stands out for me is going to be in this zone right here, as far as an expectation of where price can go if we break to the upside. I'd be curious to see what that looks like. All right, yeah, we got a little bit right there. So if we go to the upside, anywhere between, I would say, 72 quarter, 72.25, and about 72.40s is where you would expect price to go to, or I would expect price to go to. Let's just bring that down a little bit, right in that zone right there. If we were to go down to the downside, let's see where we would go. I'm going to I like predicting first and then putting volume on second. I'm going to say this little guy right here is probably where I would expect price to go. Let's see how accurate I am, if I'm accurate at all. Look at that, pretty close, right in that level. So you can see that if I'm projecting price to go down to the downside, my target location, if I can change these around, is just going to be about right here. Therefore, if I need a break and close below this lower level of structure support, probably not going to have a lot of opportunity there because it'll probably just go straight to targets. Vice versa, if I need a break and close above this level, a little bit more room here. This one would actually make sense for me personally. There's a good 40 pips in there, not counting the pullback. So there is some room to the upside. However, if you are someone that's looking for a violation of these trend lines, you can see there is a lot more opportunity and room for you to trade here. So keep that in mind. Again, I'm not telling you to do one or the other. You need to follow what your trading philosophy is. And again, traders, tier one traders, this is why it's so important to establish that trading philosophy in the very beginning, or at least not at the very beginning as far as like your trading journey, and not wait till you're live trading and stuff like that. But want to give examples of both sides. Do me a favor, let me know below, how do you handle this situation? Are you someone that likes or finds that you value horizontal support and resistance? Or are you someone that values trend lines? There's no wrong or right answer, but I would love if you answered the question. And what I'll do is I'll put it, you can type it below, or I'll put a YouTube community poll there as well. So just head over to like the post part of YouTube and answer that poll question for me, because I would actually just really love to know. Aussie Canada is next. And just a side note, this has been a very interesting pair, right? Historically, this has been an extremely consolidative pair, right? If you look past or anything before April 2025, sideways chop, But then since April 2025, clear directional movement. So very interesting here. That clear directional movement has brought us to a previous structure high from back here in 2021. And now we are putting in the signs of a potential reversal and a potential reversal pattern called the head and shoulders. And this gives me a perfect excuse to walk you through the psychology of a head and shoulders. So price action has given us an extension. This is going to be our first directional move. We have got a retracement, which is all normal when it comes to a trend. We then get another extension higher, but as you can see, this extension number 2, is smaller than extension number 1. Even if you were to go back a little bit, this previous extension is even bigger than this one, right? Anyway, all that to be said, one of the signs of a slowing trend is when your extensions start to get smaller. And the other part is, pause the tape if you know it, try to play along, guess, I'm gonna filibuster for a little bit. Another sign is when your retracements get deeper, and you can see that this current retracement, sorry about that, is deeper than the previous retracement. Now, when I say deeper, I just don't necessarily mean the length, but the ratio, right? So if I were to take a Fibonacci retracement from the previous swing low to the swing high, you can see that our retracement comes to just a 382 Fibonacci retracement, which is a level for a strong trend. If I were to take a Fibonacci retracement from our recent low of the extension to the high, you can see this one comes all the way down to the 886. That's why I call it a deeper retracement. Ratio-wise, that is a sign of a slowing trend. Now, the next part, right, in a head and shoulders pattern would be the right shoulder. I should kind of mention this, by the way. This is called the left shoulder. This is the head. This is the right shoulder. And we expect the right shoulder to turn around, which would make this a failed extension. So again, in a strong trend, this should extend higher, making higher highs and higher closes. In a failed trend, we are not going to, or failing trend, we're not going to extend that high. And then we're going to violate our previous outside return to the downside. And again, this is what gives us our head and shoulders pattern. Left shoulder, retracement, shorter extension being our head, deep retracement, and then failed extension giving us our right shoulder. And then we need a violation of the neckline, right, which is the connection of these bottom two to confirm this head and shoulders. Now, just like we spoke about in the wedge video, there's two ways you can look at this. If you are a trend line trader, and I did put up a poll question, I remembered, I was afraid I was gonna forget, so I did put it up, and there's no answers yet because it's early Saturday morning, but I hope there will be. There's two ways you can look at this. Your neckline could be a trend line like this, meaning that if price action were to violate this line, that would confirm the head and shoulders. Or you can use a horizontal level taken from the low of your neck like that, and then this would be the violation. Now, I spoke about being consistent, so if you're asking yourself, Akil, which one do you use? I always use the horizontal support and resistance. So I would need that lower level to be broken and closing below in order to have my violation and confirmation of the head and shoulders pattern. But what you'd be looking for here is a short entry, so looking for price action to go lower. There's not a great amount of room to the downside, mainly because we're going right back into a previous level of consolidation, which isn't great. But again, if there's a level that stood out to me, and there's different ways we can look for targets. It's really early on right now, but I'll draw a few of them on. Just understand you may have to adjust them if price, once we get the right shoulder. I'm not sold on our right shoulder completing yet because we're kind of just there, but we can do an early version of it. But just as far as a pure structure perspective goes, this is where I would expect price to go to. Yeah, we've got an even handle number in here. Let's call it 96 even. Again, we can throw some volume on and see if that gives us any clues of what levels may be important. Actually, a little bit higher than that, right? 96.50. So 96 even and 96.50s, anywhere in this zone would be a decent level to shoot for, in my opinion. Now, there are a few ways you can do it. Again, it's really early, but one, we can take a Fibonacci extension from the head to the right neck and back up. And you can see we have some Fibonacci levels down there, a 127 at the top, a 1618 at the bottom. You can also take an AB equals CD pattern as well. Again, we don't know where that's going to be yet because our right shoulder hasn't completed. But if we were to complete right here, that would put us right down into that zone too. And then there's other things you can do like equal length breakouts of the pattern, but we'll save that for another time. But still early on, we still need that right shoulder to complete. But keep an eye out for this. Real quick, Tier 1 members, I spoke to one of you guys the other day. I'm not going to put you out there so you don't get bombarded with messages. But I spoke to a trader Friday night who's actually doing a pretty cool study on head and shoulders, seeing, and he's doing it right now, but he has more data to collect, but seeing about how the depth of the retracement of the right shoulder affects the win percentage, meaning that if do deeper retracements win at a higher rate, do shallower retracements win at a lower rate, and then using that to kind of profile his setup. So I told him to share the results with me when he is done, but for you guys that are head and shoulders traders, keep an eye out for that because I think that's a pretty cool study. Speaking of studying, because we're on the topic, I guess this is the perfect time to do it. If you guys are interested in studying, learning how to trade, educating yourself, and surrounding yourself with a great community of traders and some awesome coaches and mentors, check us out, www.tier1trading.com. I always recommend you start with the risk-free 14-day trial membership. That way you can get on the platform, try things out, and see if we're the right fit. We are doing some maintenance to the platform right now, so there may be a few hiccups as we start to roll out some really cool upgrades. Fingers crossed by the end of June. So just forgive our mess while we're breaking everything in the background and rebuilding it so it looks a lot better and runs a lot more efficiently. But www.tier1trading.com, come check us out. Speaking of checking out, let's check out the Euro Canada daily chart once again. We have two potential advanced pattern formations forming, one big and one small. Let's start with the small one. So if we look at this point right here, this is going to be our starting point, which is going to be our X2A leg. So I want to take my line. I want to draw it from the swing high to the swing low. Let's try that again. I want to take my line. I want to draw it from the swing high to the swing low. That is going to be my X to A. I then want to take out my Fibonacci retracement tool and drag it from that same swing high to swing low. I know it's repetitive. Why do you draw the line and the tool? Because I'm repeating the process. I'm ingraining it in my head. If you guys saw the podcast on the power of writing and handwritten notes, this is very similar to that, right? When you write something down, your brain has to work extra hard and it remembers it more. When I do these different steps of like saying, hey, swing high to swing low and back down, or drawing a line, then drawing a fib, I'm just going over the same thing multiple times. That way, it's like running different checks in my brain. So there is a reason I do it. It helps me retain information. I would recommend trying it. I would also recommend checking out that podcast if you haven't already. It's really cool. But we have a 618 retracement. So this is going to put us on alert for a Gartley pattern, and I'll kind of skip straight to the point here, not to make this too long. In a Gartley pattern, I look for a completion at the 127 Fibonacci extension, taken from our A leg to our B leg, and all in all, that looks like something like this. Swing high to swing low, X to A, first retracement, A to B, failed extension, B to C, and then a D completion point. This is where we would look to take the trade right up here at our 127, with the zone being from our 127 to the top of our X leg. So we call this a deep Gartley pattern because it completes really high in the zone, and it would provide a really good risk reward. If I just kind of drag out what I think a basic risk reward will look like, you're going to see this thing is going to be very pretty indeed, right? Aggressive entry right at the 127. Targets, stops. Oh, baby, that looks good. All right. So that's one pattern for you. Our other pattern will be starting at the opposite ends. Let's take this and let's make this our X leg right here. You can probably see it already. This is going to be our swing low to swing high. Either one of these swings is fine. I'll actually take this one right here, but it's either one is fine. We would drag our Fibonacci retracement from our swing low to our swing high. That's our new X to A. You can see this one hits the 50% and not the 618, which shifts this from us looking at a Gartley pattern when it hits the 618 to a bat pattern when it hits the 50%. And with a bat pattern, we're looking for a completion down at our 886. So this zone right here. So once again, swing low to swing high, X to A. First retracement, A to B. B to C right here for now. This would still be a C leg if we even complete this bigger one. And then a D completion down at our 886. Now, I know what you're thinking. Akil, could I potentially trade this one all the way down to this one and then trade it all the way back up? Or not all the way back up, but back up. And the answer is yes, you could. But I would warn you. And this is something called the aggressive C, which makes me very, very angry. And I don't feel like going down that hole because I got a wedding to go to later and I don't want to be in a bad mood. But the question you need to ask yourself is, does anything about price completing this Gartley tell you that this bat is more likely to complete or not? And my answer would be no, right? Just because this completes, right, my expectation for the Gartley pattern is to go to this level and maybe even this level. But there's nothing that makes me anticipate it's going to go all the way down here. So could it do it? Certainly can. And if it does it, would it be really cool? Yeah, right? But when you're putting your hard-earned money at risk, you need to ask yourself that question. Am I putting my hard-earned money at risk to do things that are super cool, or to give myself the best opportunity, best and safest opportunity of extracting profit from the market before getting caught and having the market take money back from me? So just keep that in mind when you're making your decision. But if there is anything that you see in general with your analysis that says, hey, I have a bearish bias and I would expect price to continue down here, then yeah, that's a whole different story. But I wouldn't just do it because of the other pattern. There's got to be a bigger reason. Next up is the Euro Swiss. And yeah, we got all types of weird pairs today because the main pairs aren't really doing much. You can see kind of my checklist right here. Here's my portfolio. There's a lot of empty spaces in here because yeah, we got junky movement. But we do got something really, really cool here. And it's as simple as possible. This is a straight up structure trade. Now, we can see that price action has recently come off a bullish move and we're starting to retrace back down. And something that stood out in this bullish move for me is a pattern called tweezer bottoms, right? And it's interesting because these aren't actually at the bottom of anything, but these are tweezer bottoms. And it's pretty much price action putting in two long-wicked rejections to the downside, which we know mean this is a previous level that the buyers were interested in. We now, present day, have a high momentum move coming right down into that level, and I would expect market to give us some relief. What else do we have at this level? Well, we have an even handle number, a psychological number in 91 cent even right there. We know us people like psychological numbers. It looks like we may have a 618 Fibonacci. I think it's gonna be a little bit low, but Fibonacci retracement down there as well. Yeah, 618, a little bit lower than that zone. So a little bit of Fibonacci influence, but not directly at that level. Now, if we go down to a 4 hour, we break up this high momentum move. You can see price has traveled pretty much directly from 91.70s all the way down to, again, getting close to 91 flat. Our RSI, our relative strength index, is massively oversold. So just to put things in perspective, if you were to load up a default version of the RSI, it would put you at a 14, or it would would put you at a 14 period, yes. But it would give you an oversold that is, 30, right? I have mine personally set at an extreme level because I like my cold drinks really, really cold, and I like my hot drinks really, really hot. So I'm an extremist, I guess, in that way. What else does extremist mean? Does that mean anything bad? Did I just say something bad? An extremist is an individual or group holding or promoting ideologies, views, or behaviors that fall far outside the mainstream norms of society. All right, it's not too bad, right? I tend to look at things differently than other people. These ideologies often embrace violence, oh no, hatred, oh no, or intolerance, gosh, and seek to reject democratic processes, fundamental human rights, or the existing social order. Okay, I'm glad I read that. I am not one of those. I am a technical extreme. What is it called when you do something different than someone else? A maverick? I don't know. You got help me out here. Someone let me know what word I should be using. But I do things different. So I look for extreme levels of overbought and oversoldness on the RSI. So my oversold is at 20, and you can see we're all the way down at 9. If you want to bring in some volatility bands as well to see how much we were stretched, like a Keltner or a Bollinger, for example, you can see they're kind of hard to see because I have them as weird colors. But you can see that we are well outside of those bands as well. So the market has been stretched like a rubber band, and like any rubber band that has been stretched, I would expect it to bounce back a little bit. And this is a perfect level for it to potentially bounce back at. So keep an eye on this level. Get this moving average out here. Keep an eye on this level for a potential short-term reversal. And again, we're not looking for a big move, but just a move back into our previous level of structure support that was broken and that we would now look to act as resistance. So maybe a nice little opportunity there. We're going to be here on the Dixie, so the dollar index. And this is another interesting one, right? Price action is trading right below a gap. So if we look left, we have a previous kind of structure high right here. We had a gap in there, but we're holding this level, right? The clues that the market has given us are these high wicks to the upside, where we press up to this level, we get rejected, we press up to that level, we get rejected, we press up to that level, we get rejected, we press up to that level, we get rejected, and we ended the week with pretty much an inside bar consolidation. Now, what's very interesting about this situation is just like a college Achille in a bar, we have been rejected many, many times. But also like a college Achille in a bar, we have not given up. We have not gone anywhere. And by we, I mean the bulls, right? So what you would normally expect is if the bulls get rejected, they would run home crying and the bears would take over. However, the bears haven't really been able to do that. We've kind of just held at that level. And one of the philosophies that I have, which is kind of weird because I was told the exact opposite at the beginning of my trading career, is that the philosophy that I have, that is that the longer price hangs out at a level of structure, the more likely it is to break that level of structure. Now, again, it all depends on the specifics of how it's quote unquote hanging out there. But I remember earlier on in my trading career, I was taught like the more times a structure level is tested, the stronger that structure level is. I actually have the exact opposite philosophy. And actually, now that I'm looking at it, we have a very similar scenario looking to the left here, where we have a rejection, a rejection, a rejection, a rejection, a rejection, right? All these times that the buyers were rejected by those big bad bears. And then what happened? Boom, right? They couldn't push it down, and we couldn't push it down. It's such a cute bear. And we broke out to the upside. So I wouldn't be surprised to see this again here. Now, going down to the lower time frame, looks like we don't really have an ascending triangle. It's very close. I guess we technically do have higher lows here, but the highs are all over the place. But however you want to look at this, right, we do have our lows getting slightly higher, and we do have a steady hold of this level of structure right here. Now, because we haven't broken and closed above, especially on the higher time frame, in the higher time frame, we haven't broken and closed above this level, I would still need to see a violation before I can do anything aggressive. But two ways to look at this. One, if we get a break and close above here, that's going to be a very good sign that price is likely to continue higher and continue higher to our previous level of structure up in here. So you can either look to trade the breakout or wait for the breakout and the pullback and then trade that. Or if you're someone that is aggressive, look to establish your position in here in advance of the breakout. Either way, I would keep my eyes on the bullish side of this market, and it'll be very interesting to see what happens here. Okay, let's take a quick pop back on silver. Not going to redo our analysis, but this is one from last week as well. At least I think it was. If not, then from a live room this week. We got a potential bullish cipher here on silver. It's already drawn up for you. X to A to B, B to C, C to D. If we come down to this 786 in this lovely drawn green box, this is going to be our completion point for the potential bullish cipher. That is a buying opportunity. Bada boom, bada bing. Another recap is going to be oil. We talked about the consolidative nature of oil. This one is going to be a potential Gartley pattern. Again, I'll kind of draw it on fresh for you, but I don't want to spend too much time here. But we had after coming off our beautiful cipher, we had an X to A, an A to B, a B to C, and we're still not doing all too much. But if price were to come down to this 127, that would give us a nice decompletion for a bullish Gartley. So that's it for this week. Remember, keep an eye out for the fundamental video that should be coming out Sunday night or Monday morning. Like, subscribe if you like what you see here. Leave any comments or share any ideas below. Oh, yeah, and if you want to learn more about trading computers and what goes all into it, what you need to look for, whether you're building one or buying one, check out this free trading computer guide. It's from my buddy Eddie over at Easy Trading Computers. I've had both my trading computers built by Eddie. He is a trader guy as well, so he knows what we do and what we need to have to do what we need to do at the highest level. So check it out. It's free. Get some information, learn, and then do with it what you want. All right. Goodbye.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.